Welcome to Investors Insights. Our topic today is follow the data. The reason we chose that topic is we think that's going to be a main focus in the coming weeks. To discuss it with me today, I have got an incredible group here scattered in different locations due to our continuity plan. I'm joined by Bobby Norman, Trey Booth, Adam Van Zant, and Ashley Page, all part of the Portfolio Strategies team here at Five Plan Partners. We've had a pretty intense discussion this morning, and we want to share some of that with you. To kind of set things up, I want to focus on some data. The new rounds of testing have found that the infection rate is 10 times to 50 times higher than the original estimates. That sounds terrible, but it means the denominator for figuring out the death rate was potentially a lot larger than initially suspected when it came to the coronavirus. Instead of the original death rate estimates of around 0.8% to 3%, scientists are now suggesting the death rate is more like 0.1% to 0.15, 0.15%. Also, in addition to that, investor sentiment is getting more information, and it shows us where the vulnerable slices of the population are. Initial studies show that people under age 25 are least negatively impacted, while the most heavily impacted are the elderly and people with obesity, diabetes, heart disease, and lung problems. It's terrible that anyone is gravely injured or dead from exposure to the disease, but public health officials and politicians are starting to determine that there is probably a better way to deal with the pandemic than a broad lockdown of every citizen. The reason we share that information with you is that going forward, as we get into this week, we are going to start looking at the economic data as well as the data on the coronavirus. And there's going to be major debate going on, which is going to put emotion into these markets. And so on that note, Bobby, I'm going to go to you first because as we looked at this information I just shared with our viewers, as well as the economic data, we're seeing multiple different conclusions.
Yeah, and Greg, it's really a story of the knowns versus the unknowns. And so far, the past 2 weeks, the market has been trading up on the unknowns, and the unknowns being that there's a possible drug or vaccine for the virus, and also Americans going back to work, which we hope is sooner rather than later. But what we're seeing is the market is ignoring the knowns, and the knowns are negative. I don't think there's any question that we're in a recession just looking at the numbers. So just last week, retail sales fell 8.7%. That's the worst reading on record. And so keep in mind that 68% of our economy is consumer spending. And then also the past 3 weeks, we've seen 22 million Americans file for jobless claims. That puts the unemployment rate close to 20%. And then also last week, we saw manufacturing fall 6.3%. That's the worst reading we've seen since 1946. So our attention turns again to this week. The market's going to be tested again. We've got earnings reports coming out. More economic reports that we expect to be weak. A good reading on housing. We expect the housing reports to be weak. And on Thursday, we're going to see another jobless claims. We're going to see another 5 million Americans file for unemployment. And then on Friday, we've got consumer confidence reading. And then, so there's a lot for the market to digest this week. Are we going to continue to see the good news on the virus and the market's going to trade up again? Or is the market going to look more towards the economic reports that we expect to see continue to come in negative? So there's a lot to analyze here.
No, you're absolutely right. And we want our viewers to understand with this amount of data coming at us in navigating through the volatility of the markets, it's going to be a battle between where are we with the coronavirus and at the same time, what's been the impact or the rippling effect of us having quarantine and self-quarantine on the part of people, closing non-essential businesses, those kind of things we're going to see across the board. So, and Trey, you gave some great insight about valuation. In other words, here in all the chaos, one of the best things to do is remain calm. Don't panic. People are saying, where's the bottom? Will we go higher? We're showing strength. Is this a new bull market? Is this a bear market rally that we're seeing? So with that, talk about the valuation in where we could go into second quarter, looking at some of the information that Bobby's looking at. And as things start to reopen, we could see momentum build in third and fourth quarter.
Yeah, so just kind of looking out at 2020 as a whole, our current research shows that the S&P 500, again, that's the 500 largest publicly traded companies in the U.S., their total earnings for the year is projected to be around $139. So if you multiply that by 18, which is kind of a fair multiple, that gives a fair value to S&P 500 around 2,500. Currently, the market's trading above 2,800, and so it doesn't appear like the market is pricing in current fundamentals. And so I think 139 is also pretty optimistic, showing that the fourth quarter earnings will come in strong. You have a weak second quarter, which we currently are in, a weaker third quarter, and then a strong fourth. And so currently the market is overpriced. What we would say is a relatively optimistic fair value of 2,500. So when you see those prices out there, when you see the S&P 500 move, we think there is a lot of optimism built in. Something we're going to have to watch closely, but that's where the fundamentals of the earnings can impact the price and the value of investors' portfolios overall. Is as earnings come in low, they're going to have to reprice in what fair value is. And so we think that right now it seems to be a lot of optimism priced in, especially if you listen to what Bobby was saying.
Yeah, and let me say this, Trey, I appreciate you using the word optimism. We like to be optimistic. At the same time, we have to be realistic here at Five Plan Partners in just looking at, what does the data say? Where do we see earnings? And, and that will determine pricing the stocks. So I really appreciate that. And in addition to that, Trey just gave some valuable information between an S&P 500 trading over 2,800 to possibly having a support level of 2,500, and there's no guarantees there. But those are some indicators or indices that you can watch as we watch this market bounce around, and we're going to be watching that very closely. And the last thing I'll say about Trey, did an incredible vlog the other day about the stock market, and I'm going to ask each of you that if you go to our website and look at the heading at the top, the COVID-19 Investors Insights, you can click there, see all our vlogs on all the information we've provided to our clients, and in addition to that, see Trey give an outstanding explanation in terms of some of the things that are taking place in the stock market and to understand the pricing in this market and things we're looking at. Trey, I really appreciate that. So, and then I want to go located over here in Homewood, Alabama, if I can say that, is Ashley Page. Ashley, good to see you. You really interjected and have done an outstanding job on updating people on the SBA loans, the PPP, all that's been taking place. There's a vlog on our website under the COVID-19 Investors Insights as well, several of them about how you've taken clients' hands that own businesses and walked them through different scenarios. Elaborate more as to what's taking place now in that area.
Well, Greg, good morning. Happy to do that. We pretty much got through, as everyone knows from the popular press, the initial round of PPP loans in about 3 weeks. That was $350 billion. So the bad news, we're out for the moment. The good news is we're out for the moment. And the reason that we say that is that we said on the vlog about 3 weeks ago, it was very intelligent to use the SBA as a way to execute this. That flowed through the system very well. As we said, we did about $350 billion. About 1.6 million businesses benefited. About 4,300 lenders participated. And the average loan amount was a little under $200,000. So that clearly to us, we deduced that that was heavy payroll, which is what we see. The good news this week is that we should get political compromise on another 370 billion going back into the system. That was looking good this morning. The holdup on the issue is funding for certain hospitals. And if we work through that, it should get funded for a second round. And that is very good news and very valuable for saving jobs in the country.
Well, and it also brings up another variable that we have to take in consideration when it comes to looking at the economy, like the information that Bobby has already talked about earlier in this vlog about what's the impact of this stimulus. Is it enough? Is it not enough? And what will it do as a rippling effect to help this economy build back up steam as we start to see things reopen? And Adam, you were very much in tune with the the debates that are going on throughout the states about reopening. Talk a little bit about that, because I think within the next 2 weeks, we're going to start seeing states determine how they're going to reopen things.
You're completely all right, Greg, on that point. So there's been a lot of unknowns, as we all know. So we're starting to finally see some cohesiveness between the federal government and states. The federal government has recently proposed a three-phase blueprint for states reopening businesses. And two examples of this: New York is finally starting to see not only a peak, but maybe going over the peak of coronavirus cases. That is a huge accomplishment of New York doing their part, staying inside, social distancing, things like that. Not only that, the main focus for the next 2 weeks is going to be testing for antibodies. Now, what does that mean? Now, when we're testing for antibodies, it's showing whether or not somebody has held the coronavirus and actually fought it off. That could be important in the future for such things as plasma transplants or a possible vaccine in the distant future. One other state we're seeing being a little bit proactive, and to Bobby's point too, this will help on the consumer side, is Texas. Now we're seeing Texas reopen parks. We're seeing them, reopen elective surgeries. And the last point I want to make to Bobby's point on the consumer is they're going to have curbside retail sales. Now, why is this important? We're going to see the consumer start to be able to go back out and not only, visit these restaurants that are suffering right now and having curbside pickup, but also retail sales. So we might see a lot of relief on the consumer side.
Absolutely, and I appreciate you sharing that, because here at Five Plan Partners, we have clients all over the country. We're registered in 34 states, and we are looking at it nationally, not only in terms of the economy and the markets, but those state economies as well. And so we want to make sure that we bring all this data together. And one thing we'll be watching closely is the rippling effect that as these states open, we all hope that the coronavirus does not increase in those states. At the same time, though, the data I shared at the beginning of this vlog, the data you've just shared, all of that's going to be taken in consideration as we move forward and American businesses get back to work. So with that in mind, we hope that you'll continue to watch these vlogs. We hope that you'll continue to share. We really appreciate all the emails and questions that we're getting about the markets. And then on social media, we continue with our smart technology and high-tech, high-touch philosophy to reach out to keep everybody informed. It's going to be a very interesting week as we see all the data start to pile up and come together, and we go through it, and we're going to keep you updated and informed. Thanks again. Have a great week.